Hi, my name is Darren from HCG.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor of having another conversation with Jose. Jose, could you please introduce yourself?
Of course. Thank you, Darren. My name is Jose Aguilar Shea, and I have the opportunity and privilege of being here with Darren speaking about international tax, and particularly in Spain, where I'm a tax partner in the Squire Patton Boggs firm.
Fantastic. First question, I get quite often these inquiries about that personal income tax law that allows some measure of exemption of income earned outside of Spain. And people tend to see it as some sort of exclusion. But my understanding is that it's very, not restrictive, but it's very precise and there are rules that apply. So not everyone can qualify for it. Can you talk us through it a bit?
Yes, of course, Darren. And I know, and as you know, just as a general background, we have always these discussions that under the OECD and most of the tax governments, right, their tax policies now, it's like tax the rich, right? That's where you've seen the changes in other, let's say, attractive tax regimes across the world. The particular point of the Spanish regime, it is not specifically focused on private clients, and there is some requirements that could apply to private clients. Like you have to, again, I'll narrow down the scope of it, but basically is that the purpose of moving to Spain, or the purpose of the law, which was approved in 2002, is to attract qualified people, qualified personnel, right? That means people that are moving to Spain because of an employment contract. And then through COVID, the positive thing is that just a couple years ago in 2023, it got extended to new circumstances, which you can see this is not the trend where you see a lot of other regimes kind of narrowing down. In the case of Spain, it was actually expanded. But again, with the focus of attracting entrepreneurs with the new world of remote working, now you can be a Google employee in California and decide, why don't I cut in half my expenses, move to Spain, continue working for Google, and just move to Valencia and be working from there because I like the weather, I like the environment. I could work my 8, 10 hours, 6 hours a day in remote working. That one is one of the attractive one. And another one, which could be like in the gray line sometimes, is the fact that you can set up your own company and develop a business. That's where there's been some discussions around this because there's probably not enough precedents, but the tax authorities are looking into it. Like the idea that you can see people thinking, I'll just set up my own company, buy a few houses and rent them out, right? And that's a business activity. And sometimes well, you have to actually prove, again, that the purpose of your move to Spain was to set up a business. And I know that's kind of vague and there's been discussions around that, but you may potentially have to prove that. And I know the tax authorities are focusing and discovering and looking through those situations which may be fraudulent, right?
Right. What about, we're looking precisely at the 60,000 euro exemption for work performed abroad?
No, that's two different things. Let me put it this way. There's a benefit from the 60,000. That's just for ordinary residents.
Right.
It's similar to the UK, the overseas work relief that they have in the UK. It's like when you're fully tax resident, like myself, any ordinary tax resident, you're taxed on a worldwide basis. So what it says is like when you're working abroad for a specific project, let's say they send you to a construction site for 3 months to Dubai, right? Which under the tax treaties, there's certain restrictions on being taxing rights in the source country, right? That means that you may not be taxable with temporary work allocations, that means that you have an exemption up to 60,100 euros. That means that could even apply in your payslip. So how we put it this way is that this is an incentive for employees, but if you look at it the real way, it's really an incentive even to companies, because sometimes the companies have to even expat people, they have to pay them more, right? So what you're saying here is that I might be able to attract an employee to be working in a project in Germany for 6 months, while not increasing my costs because I'm giving him a tax benefit, or the level of incentive that I have to give him is limited. The only requirement there is that the works have to be physically performed abroad. It doesn't work if you're working from Spain for a foreign project. You have to actually move there, and there has to be a benefit for the company abroad. And this is interesting because that means that if I go for a tax congress to Saudi or United States, that doesn't count because you're actually looking for work for you moving back to your home country. So that's not works performed abroad. If you're going to a sales meeting, which you're looking into selling your own projects from Spain or your own products, that doesn't count. So you have to do consultancy, construction, advice for the foreign company that you're actually doing there.
I see. Jose, if anyone wanted to get in touch with you to follow up on any of the topics that we discussed, what's the best way to find you?
My full profiles in LinkedIn, and also you can find me on the webpage. Just put my name up and Square Pattern Box, and you can find full details. So happy to always assist and even for informal conversations.
Fantastic. Thank you.